everyone. So we've come to the end of the week and it's been a good trading week. We've been looking at pivot points. That has been the major focus on the program for this whole week. And just a few minutes ago, I uploaded the pivot points indicator onto the Telegram group with a small, well-designed explanation of how it works and what it is and how you can calculate these pivot points manually. So all that information is there, how to calculate them, what they are, and their support and resistance levels, which are there every day. You know, they are calculated by the price every day. Yeah? Now, you know, if you look at so many areas that we consider to be support and resistance, I think pivot points are undisputed points of support and resistance because their calculation comes from price itself, and they change every day. So that flexibility makes them quite very important for your consideration. Yeah, so I've put the file onto the Telegram group. If you're not part of it, you can just search for my name, MAKUNNE MERCELINO. You can just search for my name and you'll get there, and you know, you'll download it. The good thing about Telegram, if you join late, you can still see what has been discussed previously and what has been uploaded. So you know, it will be very, very simple to access it. Yeah, so it's there free of charge, and you just have to unzip the file. It's a zipped file, so you just have to unzip it. You need either WinRAR or 7Z or whatever unzipping program you use on your operating system. And so this file doesn't work on phones. I'll just have to repeat that. Phones cannot take custom indicators and custom scripts or robots. You can't really add to the code of MetaTrader, but on these PC versions, you can add a lot of code and scripts and everything to MetaTrader and use them to enhance your trading. So it's very, very important to have a computer with you, you know, just to help you to, you know, whatever is available that helps you to trade better. I honestly suggest that you take it. You know, you just take it and it will help you to have a better perspective when you're trading. So the pivot points are there. We've been using them the whole week. They are daily pivot points. You can, using that same formula that is there for calculating the pivot points, you can use that same formula to calculate the weekly pivot points, the monthly pivot points, and pivot points of a given period of time, as long as you have the candlestick of that time frame. So if you have a 4-hour chart and you want pivot points that run every 4 hours, then you just use a previous 4-hour candlestick and you'll have your points. Then there's normally a 2-hour chart. Yeah, that one is a bit, it's not new, it has been there for a long time, but it's not very common on MetaTrader, but you can have it on MT5 and yeah, so, the one that I've uploaded is for MT4, yeah, MetaTrader 4, so MetaTrader 4 is a little bit more accommodating than MetaTrader 5. Yeah, though there are pivot points for MT5, but just install MT4, put the pivot points there, and let it be a tool to help you analyze all these charts. It will make it very easy for anyone who finds trouble calculating and finding areas of support and resistance at a certain given period of time. So if you have these pivot points, they will really help you to get very, very nice pivot points. So these ones are determined by price itself, not by our own bias. You know, personally, when I look at the chart, I can have about so many points of resistance and so many points of support. And you know, everyone basically gets so many points. Say you go to the 5-minute chart, you find many points there of the support and resistance. You go to the 30-minute chart, you find more areas of support and resistance. And so in a whole day, you can have about maybe 30 points of support and resistance, and most of them are total rubbish. So when you have pivot points like these ones, you have 3 areas of support, 3 areas of resistance and a nice pivot to separate the two, and that is for a whole day. So that that is really important to have on a daily basis. Yeah, instead of having static charts that you're looking at for, some people put a certain, like you can analyze a weekly chart and you can have that information there static for a whole 2 months without any change, and that could be a very big disadvantage to you. It could be an advantage if you're making money, but it could be a disadvantage, especially if you're making money off the wrong analysis. So these pivot points, they really help you if you're a new trader. If you're a beginner, then this will be a very, very nice tool to help you find areas where price might fail to move above, or areas where price might fail to go below. So so the indicator is there. It's on the Telegram group. You can download it and put it into your MT4 platform. And for the last time, it doesn't really work on phones. So if you just have a phone and you don't really have, if you don't have a PC and all you have is a phone, you're not out of luck. You can calculate them manually. I have put the formula there as well on the Telegram group, so you can look at it and you calculate your pivot. Now, I think we did that on Monday. I calculated some pivot points here on the program. Doesn't take a long time. So if you have a favorite chart that you like trading, you can calculate them manually and put them into your chart on your phone, and you'll have a very nice 24 hours looking forward to getting these, looking forward for the price to move from one pivot point to the other, either upwards or downwards. So that's a very big advantage, especially if you're not, if you trade so many charts in a day, or if you analyze so many charts in a day, then you obviously need the indicator to automatically analyze for you those charts and get for you those pivot points. But on a phone, you might be restricted to a few charts, so that will also be easy if you calculate them manually. So you will just have a few charts that you really like, maybe gold. Gold is it's a chart that people love. So there's gold, there is Gbp Usd, people love that chart as well. Some people like USD JPY. There are some hardcore traders who like USD JPY. That one is there. Euro USD, that one is loved by everyone. If you don't love Euro USD, then you need to find something to love about it so that you love the chart. Every Forex trader loves it. It's believe it or not, it's the most powerful chart in the world. Euro USD. It represents Europe and America. Very strong, physical locations on this world. So it's quite a powerful chart. So I think that's it about the pivot points. We're going to use them again today and do some analysis, look at these charts and how they are moving, and how today we have non-farm payrolls. It's the first day of the month, and every first Friday of every month there is non-farm payrolls, and today is the first day, and they didn't waste any time. So it is right there. We're going to look at it and see what to expect. We're going to see what to expect from that chart, and shall look at these pivot points where the Euro USD is, Gbp USD, charts that could be affected strongly by the non-farm payrolls. We shall look at how far they could go, and also just take a quick look at the pivot points. Normally, when they are very squeezed, you can hit all the resistance levels or all the support levels. You can hit them easily, but if they are widely spread out, then you have real support and real resistance. But non-farm payrolls doesn't really follow those rules, so it's going to be quite interesting. So let's take a look at the economic calendar. Okay, it's still loading. Let me just refresh it a little bit so that it loads. And look at today's events. So as we wait for these events, maybe I can tell you a story, a very relevant story to Forex, everything is relevant, but you just have to find the relevance. Yeah? But this one here, it's about non-farm payrolls. And yeah, so that whole feeling you get every time you blow your account, that feeling you get that, that someone is watching you and someone is maybe hoping that you blow your account. I used to strongly believe in that same thing as well, some years back. Yeah, and it had something to do with non-farm payrolls. So I had this account, I had put $20 aside for non-farm payrolls, and I'd given it a lot size of 0.1. Yeah, so I put it aside and I waited for non-farm payrolls, and yeah, it was a Friday like this one, and the event happened. It happened, and I'd put a pending order above, a pending order below. The whole, you know exactly when you start trading non-farm payrolls, those are the first ideas you get, and you don't even tell anyone that you're putting these pending orders, because you don't want anyone to know your brilliant strategy, your very, very brilliant strategy that, if the price goes up, you're going to make a profit. If price goes down, you're going to make a profit. So you feel very, very brilliant, and you don't want to share your ideas with people because, that's how African thinks. That's how Africans think. If you tell someone your idea, it may not work. Yeah, I don't really know how that works. If you have a nice idea and you tell someone, your idea may not work. I don't know if it's some kind of fate or some kind of superstition. It's something crazy. So anyway, I placed my pending orders above and below. And this time, the price movement was really, really strong. It was very strong. And, this price, my account had put 0.1, a 0.1 lot size. So it went up. Very far above, and it had made about a $50 profit, and it started staggering there a little bit, and I thought to myself, maybe I should take this $50, maybe I should, so I added in another trade over it was 0.05 lot size, added it there, and the thing really skyrocketed, and so the actual price reached about 120 something dollars. That was a profit. It was very exciting, and I looked at it, and when you're a beginner, you really feel like you can do better. You feel like this is little money. You just put $20, now you have more than $100 in your profit bracket, and it seemed like little money, because I was killing it that day. So I waited. I waited for more money, and the prices came back, and it came back to about 70. I said, okay, I'll take 100. Came back to 50. I was like, okay, I'll take 70. It moved back to around 80. I said, I'll only take 100. Then it started moving, and it wiped out. It wiped out that account. There was a 0.15 lot size on that $20. So it didn't really move so far below the 20. It just hit it. So I was there, feeling, how you feel. I was there feeling a little bit, discouraged, feeling bad. Then, my phone started ringing, and it was these Forex account managers. So the guy called me, was like, hey, Mr. MAKUNNE, that there's how they have those accents. I think it's from Switzerland or something. Mr. MAKUNNE, I would like to talk about your account and how you're progressing and everything. Told the guy, man, you know what? I'm going through something right now. We should talk, I think, on Monday. What I'm going through is a bit tough. It goes like, I can see your trading history. You've just taken a hit. Just recently, you've lost this small account, and so at that time, I really believed that, maybe these brokers actually are watching your account, and they want to sweep your account and stuff like that. So when that guy called after that, after that incident, it really cemented my belief that, maybe when we place our trades there, these guys in their offices, they are like, this guy's here. This one here has put in a very big lot, so they start betting on your account, saying, you know what, this guy will not close it until it bangs him, or, he might not close it even if he has a very big profit. So I started feeling like maybe these guys play games on our accounts. They are watching you, and some people have put in money. They're now betting on our trades. So they put in some money, and they start saying, you know what, I think this guy is going to get hit. Another one is like, no, this guy here, maybe he has been hit about 25 times in the past. Maybe this is the time when he doesn't take this hit. So this one puts money, the other one puts money. So when you get hit, the account manager calls you like, what the hell is wrong with you, man? He doesn't tell you what's happening. So you started getting a feeling like, you know what, these guys who are betting against you, maybe they are doing something to make sure you get hit or something like that. Yeah, but those are the things that you start thinking when you fall into some kind of a mild depression, not a very big depression, but just something mild. You start thinking like, there is a whole conspiracy going on, against me. These guys want my small money. But anyway, that was I think after that I started looking into what they call market makers, the big banks, and looking at everything from an academic point of view. Yeah, it's very, very important to to look at things like that. Yeah, forex trading is quite big. People created something that they just can't control. The stock market is just a few companies, and companies can easily be some things can happen with companies that they might not disclose some information, they might disclose some information. Whichever way things happen, some markets are easy to manipulate, especially when you're very, very skeptical about them, and when you really think about it. If a market is small, it's easy to manipulate. If it's very, very big, that one may be difficult to manipulate. Like the forex market it's quite big. It's quite, manipulating a forex market. You really have to be big. You have to get an entire country and make it somehow big. If you want Euro USD, if you want the chart to go up, then you have to go and sponsor Europe. You make it very rich and look very, very much better than the US, and then that chart will go up. So maybe you go there, you do whatever you want. But then, the effort that you can put in to make that difference in that chart will be some serious effort. So to manipulate an entire country is a little bit more difficult than manipulating a company or manipulating a synthetic chart. A chart which no one literally knows what's going on. You just these synthetic charts. You talk about them with a lot of confidence. So the explanation is mostly in your confidence. You start telling people that it's synthetic, but then I know what moves this chart. I know what's happening in the world that moves this chart. So I can give you some fundamental events that are going to affect this synthetic index and whatever. So you can say that with a lot of confidence, and then people will believe. But the facts will not change. These charts are quite, they are quite slippery. So when you're looking for a market that is not easily manipulated, one, you need a big time frame. If you're trading in a 1 minute time frame, there could be a lot of manipulation there. A very small price movement can cause so much movement in a very small time frame. It may not be significant, but if you're scalping with a very big lot size, it will be very significant for you. Like these options. When you start trading options, you're in a 5-second chart. Now a 5-second chart, a price movement in a 5-second chart might not really show, may not really be significant to what's happening in that country. It may not have a lot of significance. So even if it's manipulated, it doesn't really matter. You lose some money, you make some money, but it's just a 5-second chart. I've even seen a 1-second chart, 2-second chart. So those charts, they're really funny. But then a 4-hour chart, and a 1 hour chart, starting from there. These are very, very difficult to move those prices. These are exchange rates. It's like manipulating Uganda to have the exchange rate to move to about 2,000 shillings. You know how difficult that is to move, to make conditions in Uganda. Very, 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 very possible to make the exchange rate of the USD UGX to move to 2,000 shillings. It is 3,000 something right now. So you know the economic the economic values that you need to have to move that price down. You need a lot of effort. To move it up is very easy. It's very, very easy to move it upwards. You can just cause inflation and what you can do such many things that can move the price up. Even destabilization and what. Destroying something is very easy, but building something is very, very hard. So moving that price down, you really need a lot of effort and you really need a lot of economic growth to give you that exchange rate. So that's why it is difficult to really manipulate Forex charts. But all these other charts, things can happen and, you might never get the right information, but if it moves in your direction, then you don't really look for any information. You just go and celebrate and take your money. But once things move against you, you start looking for, the market makers, the big banks. You move into a stage of conspiracy, and you can learn so much from that. But what will always save you will be the truth and all the facts that are there governing all these truths that are there above these markets. Okay, so the economic calendar is now loaded. We can take a look at some events, and today is quite, this week has been very eventful. It has been a very nice week. Fundamentally, we have had so many events, a lot of volatility, even in the markets that seem to be moving in a sideways kind of format. There's been some good volatility. At least markets haven't been very dormant this week. And today we have a main event, the non-farm payrolls. So let's just take a look at the events for today. And the first one, maybe in 12 minutes. This one has very low, impact. It's the market manufacturing PMI. Then market manufacturing PMI also affecting. This one here in 22 minutes is affecting German and the euro as a whole. The one in 12 minutes is affecting Italy and Europe as a whole. There's also an event that is affecting France and the euro. Then the one also affecting, this is trade balance. But the ones which have medium impact, this one for Italy and the one for Germany. So previous figure there is 58.3 and the expected figure is 57. But these figures are all above 50, which is good for the euro. So these market events, they always have, the good figures are above 50. The bad figures are below 50. So you can see this one here, which was affecting Spain. That was at 10.15 earlier on. The actual figure came out as 54.2, dropping from 56.9. So it is red, showing that there's a decline, but the impact, I don't think you would have found any impact there because the figure is still above 54. So that also works on your volatility as well, and you must really consider it when you're trading. Okay. At midday, there are two events. There's the HICP year over year. There are too many abbreviations here. There's HICP with a hyphen X, then FEAT. That is year over year. So HICP normally stands for Harmonized Index of Consumer Prices. At least we have that one on lock. We know exactly what it is. This is year over year, very high impact. Previous figure there is 5.9%. The consensus is 6.6%. So this one here is probably going to be good for the euro. Yeah, if the high reading goes up, so if the reading is high, if you have a higher reading, then it's positive for the euro. If it's low, it is bad for the euro. So this one is already projected to be very good for the euro, and it's year over year, meaning for the consensus, a lot of time has been put in looking for these numbers here and figures to get that 6.6%. Still at the same time at midday, this one here is HICP. We already know that that is a harmonized index of consumer prices. Then, okay, so let me just read this one out so that it makes a little bit more sense. So the core consumer price index released by Eurostat is a measure of price movements by the comparison between the retail prices of a representative shopping basket of goods and services, excluding the volatile components like food, energy, alcohol, and tobacco. So the core CPI is a key indicator to measure inflation and changes in purchasing trends. So a higher figure here is seen as positive or bullish for the euro, while a low reading is seen as negative. Yeah, so sometimes I just like reading out this stuff. That's why I've just read that one. Okay, but it doesn't explain all this. Anyway, previous figure is 2.7%, and the consensus is 3.1%. So this one here is it is bullish or positive or hawkish, whichever term you want to use. So this one here is positive for the euro, and these two events at midday have very, very high impact. So, your day can start there, with some nice movement. It could push the Euro USD up because they are both positive figures for the Euro USD and the US dollar. Their trading session wouldn't have really opened by then. So, yeah, you can take your time here and, you look at this chart. We have about an hour and a half for this event to actually come out. So you can prepare yourself and trade it, maybe in a big time frame, maybe in a small time frame, but yeah, it's quite isolated. It's quite isolated from the US dollar. So for the euro, any chart that has the euro within the pair, you can really look for some positive movement, some bullish movement for the euro. If it is the first currency, you can expect it to move upwards. If it is the second currency, you can expect it to move downwards. So that is quite something. Okay, then the real events begin at 3:30. These are also very real. The harmonized index of consumer prices affecting the euro. These are very real. They're very, very important. Year over year, both of them. Yeah, but for the US dollar, and basing on how people's hearts beat when they see non-farm payrolls, it's going to be out at 3:30, non-farm payrolls with a number of other events. So, people's hearts beat for the non-farm payrolls. It's quite, it's a good time. It's a good time of the month. Just one Friday if you get, and it's a good thing that they put this event on Friday, because if it hammers you, then you have the weekend to stabilize and come back on Monday when you're steady. If it was on a Monday, you'd have a bad trading week, but because it's on a Friday, you can enjoy yourself. You can laugh at yourself, you can sleep tonight, and maybe if you make a profit, then you'll start calling everyone. You start explaining your brilliant trading strategy for non-farm payrolls, which doesn't even work. But that confidence is really, it's good to feel confident sometimes. I'm not saying that to discourage you, but non-farm payrolls is one hell of an event. And many times the consensus has misled so many people. So that's another thing to really watch out for. The consensus is quite, it's not really nice. You don't have a good consensus with non-farm payrolls. It hasn't been very steady. But Anyway, let's take a look at all these events one by one affecting the US dollar, and we see which ones are positive, which ones are negative, and what to really expect based on the information that we have right now. So the first event is average hourly earnings. Month over month. Previous figure is 0%. The consensus is 0.4%. This one is expected to be positive for the US dollar. So 3:30 we have one positive event for the US dollar so far. Second event is year over year average hourly earnings. Previous figure is 5.1%. The consensus is 5.5%. This one is also expected to be positive for the US dollar. So that is event number 2 at 3:30. Positive for the US dollar. Some good volatility expected there. These are two medium impact events, but combined you have quite some volatility there. Okay. Another event here, very low impact, the average weekly hours. So this one is expected not to change from 34.7 to remain as 34.7. So that one is neutral. Yeah, so we have 2 positive and 1 neutral. Then the labor force participation rate. Yeah, so the previous figure there is 62.3%, and it's expected to drop to 62.2%. So this one, this one is quite, it's quite negative. So we have 2 positive events, 1 neutral and 1 negative. Then the main event, the non-farm payrolls. So previous figure on this one is 678K or 678,000. Then the consensus is 490,000. So for the non-farm payrolls, we expect this very big drop from 678 to 490. But non-farm payrolls is a bit, it's a bit trickier. Sometimes you get the consensus like this, and it comes out very different from the reality. So we're just going to, because it's a non-farm payrolls, we have to give it some kind of, we have to look into it before we move forward. Because we have to look at the previous movements, and I think from the end of last year, I think starting with November, these events were quite, the information here given by the consensus was quite very different from the actual event. You'd expect a very big drop, then you get a very big rise, or you expect a very big rise, and you get a big drop instead. So here is some analysis of the non-farm payrolls itself. Summary is probably loading. Let's see if the data and chart will load. Okay, let me reload that. These are some kind of widgets that take some time to really load. So, okay, I think we're getting some information there. But anyway, we're not moving away from it. When this one loads very well, we shall get back to it. Yeah, so normally with non-farm payrolls, every time you get the non-farm payrolls, okay, the widgets are now loading very well. So we have the historical data there, we have the chart. This data is now what is important. So you can see previously you'd have the consensus as this figure. Yeah, so you can look at the non-farm payrolls for Feb. Yeah, for February, the previous figure was 481. The consensus was 400, so we expected price to go down. We expected this to be very bad, and the actual figure was 678. So that was, some people took a hit. Yeah, then for this, okay, that was for Feb. For January, previous figure was 588. The consensus was 150. We expected that very big drop, and the actual figure came out as 481. That broke many hearts of so many people. In December, previous figure was 647. What was expected was it to drop to 400, and yeah, there was a slight drop to 588. Yeah, that was another heartbreaker for so many people. So you can see the trend that has been there. I think the biggest heartbreaker was the one for January, where the previous figure was 588 and the consensus was 150, and the actual figure came out as 481. So January was a very big heartbreak. Feb was also a very big heartbreak, you know, from 481 expecting it to drop to 400, and then you get 678. That was actually a very big heartbreak, and people have started becoming very silent about non-farm payrolls, yeah, because one day you're celebrating and the other day you're quiet. You know, every time you celebrate in the first month, then the following month people wait for you to come out to celebrate as well, and when nothing happens, then you know we all know exactly what happened. Yeah, celebration means you made a profit. Silence means you were hammered totally. So the non-farm payrolls comes with some other data, which is normally the underemployment rate and unemployment rate for the US. And this time, these are normally very high impact events, especially the unemployment rate. But this time it's a medium impact, maybe because of what's happening with everything that's going on in the world. So all these events, we're going through them one by one, but they're all going to come out at once. Yeah? So we have the non-farm payrolls giving us a negative. Yeah? So we have two positives. We have average hourly earnings month over month, expecting a positive outcome. Year over year, positive outcome. Average weekly hours, no change. Labor force participation, some kind of a negative outcome. The non-farm payrolls, very big negative expectation basing on the consensus. Then the underemployment rate has a previous figure of 7.2%, and there is no consensus there. So for this one here, we just wait for the impact to come in. We wait for the actual event, the figure that will come out. Then unemployment rate, very, very important for the US. Previous figure is 3.8%, and the unemployment rate is expected to reduce by a 0.1%. So the consensus is 3.7%. So this one is positive, expected to be positive. So you can calculate your positives and your negatives with one monster negative there, the non-farm payrolls. So yeah, if this one was part of the positives, it would have been it would have been a nice trade, at least based on how people can be feeling in those moments before the non-farm payrolls. The actions could move in a direction that is based on sentiment. Yeah, that's where sentimental analysis comes in. So here, because of the consensus, we expect a negative outcome. So many of the emotional people are going to trade against the US dollar. Yeah, so they're going to buy Euro USD, Gbp USD, and probably push the prices up for some time. And if the actual figures come in and they are very positive for these events, then the prices will, if they come out and they're negative, then that sentiment will be backed up by reality, and there will be some good profit to collect. And hopefully your account managers will not call you. They will be celebrating because they want to bet, because some guys who have just opened up accounts have made some money, and you'll have a very nice weekend. Okay, so all that will be at 3:30. Then so you'll have 1 hour to relax and rest. Then at 4:30, affecting the Canadian dollar. Canada also normally has events that come out with non-farm payrolls, but this time they just have the market manufacturing PMI. Previous figure is 56.6. The consensus is 56.5. Still above 50. It will be good for the Canadian dollar. If the actual figure comes out above 50, if it is below, that will be very bad for them. Okay, then 4:45. medium impact event, market manufacturing PMI affecting the US dollar. Previous figure is 58.5. There is no consensus there. So for this one here, it is sort of neutral, but it's also good for the US dollar. So if these events come out positive for the US dollar, and they push Euro USD down and GBP USD down, this one could push them down even further. If they move upwards, this one here might provide some kind of resistance for the price. Okay, so other events there, the ISM Manufacturing Employment Index for the US dollar. So this one here is expected to rise from 52.9 to 53.7. That is positive for the US dollar. That will be at 5 p.m. Yeah, so then the ISM Manufacturing New Orders Index expected to drop from 61.7 to 59.8. So this one here looks to be, it's expected to be negative for the US dollar. Then the ISM Manufacturing PMI, this one here, figures above 50 are good for the US dollar, below 50 are bad, and we're already so much above 50, and it was expected to be 59 compared to the previous figure, that is 58.6. So there's a lot of positivity there for the US dollar. Yeah, so if here we have positivity and it's going down, definitely prices will go even lower below. If these ones go up, then these ones here will provide resistance. Yeah? So those are the events left. The others that are left are very small impact events, very late in the night. Maybe just one more. Still at 5 p.m., the ISM manufacturing prices paid, affecting the US dollar. Yeah, so this event, the previous figure is 75.6 and the consensus is 80. That is very, very positive for the US dollar. So this one combined with that one, it will give you a lot of positivity. Yeah? These others which are trying to go against the bullish outlook for the US dollar, these ones may not have much impact against this ISM manufacturing PMI. Yeah, but anyway, it's going to be quite, it's going to be fun and interesting to trade these events today. In the night at 8 p.m., there is the Baker Hughes US oil recount. All these ones don't have a consensus, they just have previous figures. So there's the CFTC gold NC net positions. That's at that's at 10:30. Then still at 10:30, that was the gold NC net positions. Then this one here is oil NC net positions. Then there is the S&P 500 NC net positions. All this is at around 10:30. So for gold, look at the gold chart. For oil, look at the oil chart. For the S&P 500 index. Okay, for the S&P 500, look at the index, and if you look at the synthetic indices of the volatility of the S&P 500 index, yeah, that's where you'll get the chain. You understand what the chain is. So this one here will affect the S&P 500 chart. Yeah, but then we have the index. So this will affect the index. Then the synthetic indices will be affected by the volatility of the index, and in that synthetic where you have 75, 100 and whatever, and that is quite tough. That is very, very tough. So, but later on there is total vehicle sales. There is no time allocation for the US dollar. Then there's a CFTC, the CFTC GBP NC net positions. Yeah. So, okay. Then also for Japan, Japan net positions, the Euro net positions, and Australia. But these are very low impact events for these Forex charts. But in certain specific charts, they will have some impact, like the Japanese index, like Spanish index. You can look at those charts and look for that volatility there. So yeah, let's look at some charts briefly. This is a GBP USD. Still in some kind of a range market on the 1 hour chart. And yeah, but non-farm payrolls is really going to provide you with some good volatility there. Yeah, let's take a look at some simple charts first before we go to these others. Brent crude oil has now broken this 78.6 fan, the Fibonacci fan, and it's moving. It's now moving upwards. So the fans have really, their usefulness is now gone. So I'm going to put the pivot points there. You just double click it and they appear. Maybe in the 1 hour chart, we look at how the prices are moving in these pivots. Okay, so for this 1 hour chart, prices open below the pivot for Brent crude oil and they're moving downwards. They've just been supported at this support level 1. So very good support has been provided for this one. Once price breaks there, then you go ahead and you trade. Okay, now this one is this is gold, and these are pivot points for gold, and we have some nice price movement. There's a lot of support there, and it has been very stagnant. But if prices break this medium support level 1, then you can probably trade to that support level 1 and maybe beyond. But the market here is very, very sort of in a range. It's not very, very good. But anyway, if you have price breaking below that medium support level 1, you can take some profit, about 60 pips to the support level 1 from the medium support level 1. But then you need some very good, you need a very good break in order to take that chance. And from where price is now to the medium support 1, they're about 30 pips, which is quite good for gold. Yeah, so, okay, let me just open a generic chart and see how the pivot points really work. We just look at a few charts and then we wait for the non-farm payrolls. So this is the Euro USD. I'm just going to, you can double click the pivot points, you can drag them there. It doesn't really matter how you do it. But now, we have prices below the pivots where price opened, and there's a very big gap between the pivot point and the support level 1, which is not the same case for in between the pivot and the resistance 1. So that is something very, very important to keep in mind. So because of yesterday's price movement, the support is a little bit further away from the pivot point than the resistance, and that is very important. That is why these daily pivot points, they are quite impressive. They are calculated by price itself, and they also give you these gaps, which you may not get under normal circumstances. Yeah, so if this one here is bearish, then probably to the support level 1, to the support level 2, you can make some good money there. Okay, so USD JPY prices open below the pivot, and looking for some kind of upward movement there. Maybe some support for that upward movement. A supporting indicator could be the RSI. The RSI, so there is a little bit of divergence there. You have this low point that is there and a lower point which is there, and yeah, in the RSI they are a bit higher. So you have these low points moving down and these ones moving upwards. So we have bullish divergence there that happened yesterday, and the topmost point was that one there, the highest point in between this low point and that one. And today, that point has been broken. The take profit has already been, it has been taken anyway. And it's at the resistance 1. Yeah, which is quite good. So this one here, divergence has played out and everything. It's quite nice. Okay, let me delete these ones. Load in just one more chart. Yeah, the GBP USD. It has been moving steadily, and Yeah, we have some downward movement there. Our prices open below the pivot, tried to break the pivot, but moved back downwards and were resisted. So we are supported at the medium support level 1, and now we are having, further. This one is a break. We even have a doji. Looks like a doji, that candlestick there, and could probably continue trading to that support level 1. The pips left there are about 10 pips. 10 pips, not so bad. Okay, so that's the last chart for today and for this week. Yeah, so pivot points will help you to pick out very nice support levels and very nice resistance levels, and sometimes they are a bit spread out. So you might not have an equal distance between all of these levels. You may not have an equal distance there, and that is very, very good. Yeah, because that if they are static all the time, they may not be real, because the Forex market is very, very flexible and very dynamic. So having flexible pivot points and dynamic pivot points just shows you that they are in some kind of rhythm with the market, with the price movement of the previous day. Yeah, so that is quite that is good, and it will help you every single day to have daily support and resistance levels where you might not trade above or where you might not trade below, because you'll have those guidelines telling you that you've hit the max. If you don't have a break here, you just close out your position and take the profit you have. If you're very stubborn, you can stay there, and if prices move against you, you might stay in a trade for a long period of time, but ultimately you will get some, you'll get a profit at the end of it all, if the future market favors your price movement. So the pivot points are now there on the Telegram group. You can just download and put them into your charts, and you can use a calculator to put those points into your mobile phone trading platform, and other platforms that don't really accept these custom scripts and indicators. It will be quite, it will be useful to calculate them manually and put them into your favorite charts. Yeah, so you can download it from the Telegram group. It's just search for my name, and then you'll get there, and you just download it and install it, and just see how it calculates pivot points automatically from one chart to the other, in a very, very non-sophisticated way. And yeah, the best thing about it is that every chart has different pivots, and if you do it the manual way, it will really be a hassle. But then if you have the calculator itself, if you have the indicator, it will point out all those pivots, and the most important thing will be for you to know why price is not moving beyond a certain level. Yeah? Even when you have Fibonacci and whatever, you'll find price being resisted or supported at some level, and the answer to that will definitely be pivots. The daily pivots will be giving you that resistance and that support, and it will be very important to just watch out for those levels. They will just help you in your daily trading. Yeah, so thank you for watching. That's it for today. Good luck with the non-farm payrolls. Best of luck. Put some money aside, and if it works out, then we can talk about it. If it doesn't work, then you can remain silent. We understand. We are very understanding people. Just keep silent. You may not make noise on certain groups, but that's life. Yeah. So thank you for watching. Have a good weekend. Goodbye.